you are representing Ukraine's private sector. Tell me why you're here and what is your representative role here? What do you negotiate about?
Yeah, no, but I don't have a formal role because this is a governor meeting where either governors or Minister of Finance or Minister of Economies or Prime Ministers meeting each other in different type of forums. So we are not part of that official schedule, but whoever I meet is very interested in to see the public sector as well as the private sector and get the perspective from the private sector. And we all know that it's not enough that we only have political decisions. You also need to implement those decisions. And very often that is the private sector is doing that. So I try to spread the light of the challenges from the Ukrainian society into the private sector, meaning all the businesses, and how we could actually, by help of decisions taken here, enhance for those businesses.
And what are you being asked? Because we have this issue that the war in Ukraine lasts for the 5th year, and some might think that there is a fatigue from the war. But on the other hand, for example, there are Ukrainians represented on closed JP Morgan conference, and there are Ukrainian private sector represented here, and they are definitely asked questions. So can you tell us what the US stakeholders and international stakeholders are interested in when talking to private sector?
No, but if we talk about two different phases, the war phase and then reconstruction phase, I think from the war phase perspective, they are more curious about it is. How is it to live there? How is it for businesses? Do you see anything happening in the sentiment, is there fatigue and so on. So that is part of it, but they are much more focused on the next step, which is the reconstruction. So this is very much about how will we ensure that we will have capital enough for, succeed with the reconstruction. So I would say all professional discussions is around that. And that can, come from different sources. It can come from, public funding, but it can also come through that you generate capital through different type of sources. So it's a lot of, I would say, technical discussions about how will we have capital enough. And that we have had figures around in between 500 billion up to 800 billion dollars. So the question is, where will it come from and how will we achieve the goals for the reconstruction?
Yeah, the latest RDNA report is more than almost 600 billion.
Yeah. So I've seen all different type of figures in between. It's still too much, So, but it's people understand that this is a tremendous large challenge.
And then, so as far as I can tell, the sentiment is that the war will still end soon and there will be a reconstruction.
They don't say that. It's more that at some point the reconstruction will come. But they also see that part of the reconstruction, meaning rebuilding things that is necessary, already have started. So it's floating into each other a little bit. The war time period is floating into reconstruction period, and we all know that we have a lot of, I would say, state-owned companies who would like to reconstruct already now, Naftagaz or others who really need, or we have all the heating plants that need to be rebuilt and reconstructed. So there is still reconstruction issues already today. So the question is, how will they be financed?
And they are ready to participate in such financing, or no?
They are. I'm not, the one who will have all these discussions, because some of them will go in direct investment, some will go into giving grants and subsidies to the state, and so on and so on. But they are interested to see what the private sector can do. What can a domestic Ukrainian bank do, and how can we participate one way or another into this with either capital, but even more with knowledge and connections.
I see. So then I want to ask a very focused question. What's the PrivatBank's agenda then? I don't know, any deals secured?
No, but we as you know, that in between that, if you take the capital market abroad, how to gain all these funds needed. Either you can have investors coming in from foreign investors, and you have this, for instance, this US Ukrainian fund as an example, but there, of course, there can be other companies who would like to come in directly. Or you can have domestic investors, especially those around that already have money. Or you can have a capital market, meaning that you have the possibility that savings from, for instance, private individuals will be transformed into capital through a stock exchange, and then can be utilized for investments. Or you have the banks. So we are representing the banks, and what you can have then is that you can have foreign banks coming in and lend out, or you can have domestic banks. The domestic banks, meaning PrivatBank, is much more active because we dare to lend out because we know our customers. Meanwhile, foreign banks are a little bit more hesitating because they don't really, fully understand the risk. And even if a lot of the foreign banks in Ukraine, of course, know the customers, they still have restrictions from their head offices. So the way for PrivatBank to expand and for other banks in Ukraine to expand the lending is to have risk-sharing capital. And that is what we have. So we have risk-sharing facilities from EBRD, from EIB, European Investment Bank, and from IFC. And all these three are, very dominant in this type of event. So what I'm doing here is that I meet, of course, these representatives in Ukraine. But here I have the possibility to meet, the highest management and to have discussion directly with them because they're interested, and we also then pay respect. And we can also directly, give our view about how we would like to expand these relationships.
The EBRD is based in London, but the IFC is based in the US, yes. And is there any shift in their attitude towards Ukraine after Trump came to power?
No, not at all.
And they're still reassuring all of the guarantees that they have pledged before?
Everything that they have pledged so far, they will, of course, guarantee, but they are interested in expanding and increase the risk-sharing limits. We have no other discussions than in a positive way with all three.
And what is the outline of this expanding? Do they see some specific sectors or specific financial instruments that they think of setting up or expanding the existing ones?
I mean, it's all of those have, I would say, when they have risk-sharing facilities to banks, it's quite small credits, and it's to also very much directed to the small businesses. So that they have, and that is we continue. So when you have filled it up, as for instance we have done now with EBRD soon, then we negotiate a new one, and hopefully bigger then, and the same with the other two. But what we discuss right now is that since it takes a little bit longer for international investments coming in, and we still doesn't have developed the domestic capital markets, then we have a discussion with them, all three, if they actually could take a little bit larger credits, because we need to have, when you rebuild an heating facility, or if you rebuild something else, these credits that they offer for risk sharing are too small. So what we try is that we try to move it upwards, so they can be, up to $50 million or something like that, and that they don't have today. So that is one thing we are arguing for. Another thing we're arguing for is also that we would like them to see if they could help us with the war risk, because we still see that some companies are hesitating in investing due to that they are afraid about the war consequences. So we also have an argumentation about that it could be beneficial that they are helping the market to start working for war insurances.
Yeah, I wanted to ask on this follow-up because this is the thing. We may talk about how, yes, the banks are capitalized, they're having record profits, and we are having real increase in real loans, but there is still this problem that we're having a full-scale war in the country, and that lists risks for foreign investors leading to this blanket exclusion. And I have recently had this discussion with the investment funds, and we ended up on saying that IFIs are the key players, not the the clear private sector, but the IFIs. But here, when you talk with the stakeholders that you mentioned, how do you negotiate this issue of blanket exclusion because of the war risk?
But we are not really negotiating here. What we are doing, we spread the light on these questions. So we are trying to give them a view, and we can tell about more detail that we have had this and this and this company hesitating due to this and this and this reason. And out from that perspective, they actually get a little bit flesh and bones onto the discussions. I think it's good that we are here and we don't disclose secrets, but we can package companies into small groups to give them more facts, and that fact they have they bring back for their internal discussions. So hopefully we're doing some use here by adding another perspective, and hopefully we can also see that we have some development in some of these areas, a little bit larger credit available for risk sharing, eventually a little bit more shared risk taking on war risk. But we can't promise anything. Now they have to go back home and work. But if we're not here and pushing, then it will not happen at all. So.
But how can they help except for larger loan volume or larger risk sharing?
But they also going directly to the largest companies. So they're utilizing the Ukrainian banks for the smaller credits. They usually go directly to the largest company. If you take Naftagaz again, they lend out directly to Naftagaz. So of course they do that. What we're talking about is there's something in the middle, in between the small business and the largest company. And that is what we want them to see, and also see if the Ukrainian banks can play a role there.
Basically middle-sized enterprises.
Because they also have a need to invest, and there it's easier if we can provide risk sharing, because when you have risk sharing facilities, then it's also a little bit easier to have enough collateral. It's a little bit easier for all, both the bank to give the loan, but also for the company to provide collateral when you have risk sharing. So from that perspective, it's a good product.
I have heard from insurance companies that the risk sharing facility might be a little bit expensive for the businesses. What is your stance on this? Does the price that banks or companies pay for the risk sharing and for de-risking under these programs is high, or it's justified because of the situation, and you can still earn profits on this when you pay for the
we don't see that as a big problem. We rather have heard the same discussion regarding war risk, because there you talk about several percentage, sometimes up to 10%, and then of course that is more or less impossible. If you talk about these type of risk sharing facilities, it's very, very much less than that. So that is it's a price for giving the credit, but it's quite high interest rates in Ukraine. So this is not a major factor in the pricing of the credits.
So the high key rate plays a role.
Sorry?
The high key rate plays a role in this case.
But of course it would be easier for all companies to invest if the central bank interest rate was lower, but now it's high, and then of course banks need to have some margin about that, and then of course we need to pay something for the risk sharing facilities. Of course it's quite high rates for investing. And the closer we will come to Europe, the lower the rates hopefully will be. and that will of course fuel a little bit the investment climate in Ukraine.
But then what became the fuel for this real credit surge that we have had last year? Because we have had up to 30% of increase in the loans to the businesses. And that was surprisingly, well, the news was surprisingly well from this front. Then if the interest rates are still high, the central bank says that the interest rates, the high interest rate is not the key hurdle for the loans, then what was the main driver of these surge despite tough conditions?
Yeah, but I think that usually when it is warring times, as it is during war, you hesitate for a while, but after a while you anyway need to invest. Because you have waited with that investment, you have waited by renewing that, and after a while you really need to start renewing, otherwise your business will go down. So I think it was more that now it's time to invest. And I also think that Ukrainians are, of course, hoping that we are in the last year, even if everyone is very persistent and will actually, depending how many years it will, we continue to fight all the time. But everyone hopes it will, be the last year. And I must say, fantastic people.
To wrap it up, I wanted to ask the question on the key agenda of the spring meetings, which is the war in the Middle East. And also Ukraine's central bank paused the easing rate cycle and also alarmed the prices will go up, and they have already went up by a significant amount. Do PrivatBank clients feel this shock that is approaching and that is already on us? Because also in Ukraine, the gas prices and diesel prices have increased very much.
But it's, I think it's MBU who have all that statistic. But if we take it from our perspective, I think that the Ukrainians have gone through a shock through the first quarter, due to the heating and to the coldness in the country. So we have already had one shock. If it comes another shock now during Q2, meaning that we will have higher prices for energy and fuel and all those things, yeah, maybe not. Today it has been positive signals. Yesterday was negative signals. So we don't really know where it ends up. What we have to do is that we have to try to support the country, and we will continue to be a bank that continue to lend out for handling different type of situations. And I assume that MBU has their box of things that they can do, but that's up to the governor to decide.
So you mentioned the NBU stance on things, but I wanted to focus more on private sector. So we have the figures that govern the central bank's decisions, but what about your clients? Do they start complaining about high prices, or do they say you that, well, we're now serving our loans right, but there might be some additional updates, maybe we will need another loan for working capital or pay later or something like that?
But I think both different type of IFIs together with the banks are seeing if we could have programs while helping, where we give them a chance not to amortize as much, or eventually also have some type of subsidy on the interest rate component. So that is things we are looking into to see if we can release a little bit of the pressure. But in general, it's too early to see that you have an effect yet. But I think what we have heard here in Washington is that a lot of, if you take the fuel, a lot of the tankers have now reached the destinations. Now eventually the Hormuz Strait will be open. But before all these tankers coming back and will be full and leaving again, we will have a gap of a couple of months. This maybe will be back on track in June, July. And of course, we will have a couple of tough months with quite high energy prices. And of course, that will affect the economy. And that is what all the central bankers and all Minister of Finance are thinking about here. How should they handle this? we as a bank, we have our commitment toward the customers and the customers towards us. And of course, all banks need to ensure that our business customers or private customers can handle the situation. And then we need to see what actually is the situation, how hard will it hit, and then we need to find measures. But yeah, we're in this together.
This phrase causes a nervous tick in my head, because I first thought about it in COVID perspective, then in war perspective, and now we have this.
Yeah. But let's see. And now it was very good signals coming today, so hopefully it will be a short, but let's see.
Right. So then, if we wrap it up, what do you think about the IMF Spring Meetings? Was it not in vain for you to establish contacts?
What do you mean, Wayne?
Meaning, do you think that spending 3 days in the road and 100,000 kilometers to get here was a valuable investment?
Yeah, it is a valuable investment, because for every billion of hryvnias we can add to our risk-sharing facilities, the more I can see that we can lend out, the more productive the companies will be in Ukraine, and the better Ukraine will be there. So I think for only that sake, it's good to be here and have these type of meetings.